we can't see your screen, so I don't know when it's playing.
All
Alright.
right,
Good
I'll do
afternoon, Jack. Oh, you want to do? Okay, cool.
All right. Hey guys, good afternoon. We're back for another episode of Jack of All Trades here with David. Today we're going to talk a little bit about technical analysis. That's kind of usually what I talk about in my episodes here. So I want to look at like candlestick patterns and stuff like that, and basically just talk about how you can use like the candlesticks themselves to help give you like confirmation on your trading, and like use that in conjunction with like support and resistance and stuff. So Sam, if you want to pull up my chart here real quick, we can take a look at this. So MRIN, I didn't trade this because I was at work, but it was just, this one ran on Friday last week. So it's just kind of, a little prevalent here that I want to take a look at. So we'll go back to the daily. You can ignore all these random lines. That's just because I have this stuff for the intraday chart. But over here, so this was the day that we were looking at. So obviously, for me, like I'm going to talk short selling because that's kind of predominantly what I do. But this is the kind of chart that I love. You get these big run-ups, failure, like every time it spikes, it fails, spikes, it fails, spikes, it fails, just over and over and over. So like that's a good sign if you're a short seller, because you know that odds are every time this thing spikes, it's going to fail. So if we jump to the intraday chart here, so if we start we'll just kind of take a look at pre-market here. I know a lot of people don't trade like intraday or whatever. I'm just using this because it's just a pretty clean, concise example that I can use some candlesticks to show you guys. But this kind of stuff works on like all time frames. Yeah.
There's one to jump in because I got a comment a few times that's saying that we move too fast in terms of our terminology. So I'm just thinking maybe we should explain what intraday means.
Oh, okay. Yeah, sure. So yeah, intraday here basically means like you're trading within a single day, like market open 9:30, market close 4 p.m. So if you're doing intraday trading, you're trading kind of like within that window. So the way that this specific chart's set up is kind of like the shaded blue area. That's your after hours and your pre-market, which pre-market is 4 a.m. until 9:30, and then after hours is 4 p.m. until 8 p.m. So that kind of shows these areas. You can see down at the bottom, like obviously volume is like way, way lower. You can trade pre-market and after hours like I do sometimes. You just have to be a lot more careful. It's not really something I'd recommend for people that are new, because you can't place hard stops or do like market executions. You have to get out on a limit order, which means you can't just basically bail out of the trade immediately. You actually have to like set an order and get filled. So if it skips over you and keeps going, it won't fill you. You have to kind of keep canceling and moving your order and chasing the thing. So it can be a little sketchy at times. A pretty good example is, this right here, MRIN. So this is after hours on Friday. So you can see the clock at the bottom, like 4 p.m. here is market close. And then they had some news come out. So, 4:15, it looks like here, we basically had a 1 minute candle where it went from $3.50 up to $5. So like that's the sort of thing where like if you were, like there was no volume the day before, so you're not going to be shorting or playing this anyways. But like that's the kind of thing where like this is the sort of thing that can happen after hours in pre-market just because the volume's so thin. So you got to be a little bit careful. But anyways, back to the original like thesis on this basically is like, okay, so we looked at the daily chart. We know that this company is garbage, and again, keep in mind like everything I'm talking about you can use on the daily chart or the monthly chart or the weekly chart. This is just a good example here. So basically, if we're looking at this time period here, we're looking at after hours and pre-market, like right up to the market open there at 9:30 at the far right hand side. So basically what I'm seeing here is like, okay, so if we look back, we look back at the very start. The first thing that you want to do, I'll just back up a little bit here so we don't get ahead of ourselves, but the first thing you want to do is establish, your thesis to be in the trade. So, is this trade going to be a long or a short, and why? So for me, this trade would be a short because I'm looking at the daily chart. It's super beat down. I know there's a ton of people that have bought this thing higher and they're looking to sell on any pop. And then secondly, okay, I want to look at, what's the news? Like, does it make sense? I can't remember what the news is on this in front of me, but I know it was basically just like a garbage press release. And then, so that's good for a short seller. That's bad for a long trader. and then you want to what are you laughing at?
I
It's
just
always the
love
same thing.
it's always the same thing. Your in-depth fundamental analysis is like,
Mhm.
oh.
Very detailed. I read one sentence and I thought that's dumb, so I figured it was a good short.
And it works too.
Yeah, it works every time. Um, yeah, so you've established those two things, you're good. You look at your fundamentals, which we've talked about in other episodes, actually in detail. So you guys can look into that, like what I look for, anyways. And then the third thing you want to look for is like, okay, whatever kind of time frame I'm working in. So like in this case, we're looking at the intraday. So I want to see that in pre-market and after hours in pre-market, before say the market open, I want to see that this thing is already failing, like it's already selling off. Anybody that's already bought is already getting trapped. Like you want to see a lot of overhead resistance, right? So that way I know if the stock is coming down and there's a lot of volume up here, if the thing spikes up into that area, all these people that are trapped up here, they're going to try to sell for break even, right? So that's kind of the main premise on this type of a setup. And right off the bat here, this is after hours. Like we're already seeing that. Like um, I can draw a line literally right here and say, okay, so this thing spiked up. We have pretty decent volume down here for after hours, right? And then you get this kind of little ascending triangle sort of thing where you get three tops and then it breaks out. And look at the volume down here when it breaks out, right? You have this big spike, pushes to new highs, and then it just completely fails. So like I know, like just looking at that, I know that this move right up at the top here, like that trapped a lot of longs because they bought this anticipating a move higher, and then it just failed completely. So all those guys are trapped. So that's the first thing you want to look at. That's a good sign when you're shorting. So if we fast forward, now that this is after hours here, so this whole block right here, this is after hours. Like obviously you can see the first move had some volume, and then it just kind of fizzled out as we got towards 8 o'clock on a Friday night, obviously. So then if we skip ahead, we'll start pulling the pre-market into this. So right here, this was Thursday night. So this is Friday morning now. So Friday morning pre-market, what happens, right? So the stock kind of failed the breakout the day before, and then it sort of moved sideways. Didn't do too much. So at this, it hasn't really picked the direction. But again, from the fundamentals, from the daily chart, and from this move here, we know that this thing's already looking pretty weak, right? So then you get the open, which you get a little bit more volume here at 4 a.m. It pops up a little bit, and then immediately it starts to fail again. And now, we've already failed below, these prior lows over here. So, the lows that we had kind of in this area, it bottomed here, bottomed in the pre-market, and then it broke that level. So we've already kind of broken our really our only support line. So these are all just things that are adding up that make me like this thing more and more for a short, right? So you keep following pre-market along. I'll just zoom out here. So we'll just capture the whole kind of thing here now. So this snapshot takes us basically right up to open. So what's happening here now? Okay, so we keep just looking at our normal support and resistance lines, right? So we've already established this one is basically our base. Get that to snap straight. So this is our base that held all after hours. It held in the morning and then it broke, right? So what starts happening now? Look, every time that's kind of our main support line, right? So main support then becomes major resistance. So as it comes down, 7 o'clock, and keep in mind, guys, 7, 8, and 9 o'clock, those are all different times when different brokers allow their customers to start trading. So with my accounts, I can trade at 4 a.m. So 7 a.m., 8 a.m., and 9 a.m., you'll always get these little volume surges because that's when different people can start trading. So like Robinhood, for example, they can't trade until 9 a.m. So that's why you see the biggest volume spike at 9 a.m. because that's when most people are, the amateur traders are kind of chasing these stocks. And then I don't know which brokers allow them to start at different times, but like 7 a.m., different ones will allow you to trade. I think Quest Trade doesn't allow you to trade till 7. I should know that because I have a Quest Trade account, but I don't use it for this kind of stuff. So and then same thing at 8 a.m. That's why you kind of get these weird big wicks and stuff too. But either way, like you can see, sorry?
I said I
You
didn't
didn't
know
know
that.
that?
I
Oh
wonder,
yeah,
is it,
yeah. All different
are they
brokers.
paying for access? Like if you pay, maybe if they're paying the exchange more, they get to trade earlier. Is that what it is, or how's the times
I
decided?
think it's just I think it's just broker specific because I know like it's the same thing for after hours. Like some brokers just don't allow you to trade at all after hours. Some will cut you off at like 5 o'clock. Some will cut you off at 6 o'clock, and then some like pay rate till 8 o'clock. So that's just kind of why the volume's inherently lower after hours in pre-market. But anyway, so like right up until the open, this thing is just looking beautiful. Like again, imagine this on a daily chart, guys, right? Like imagine you see like this huge run up, and then this is over a period over here. Like say this is over a period like a few months, right? So it's kind of support for a few months, and then it breaks down, and then you see it kind of spike up into this level, like that level you can look at to short into, right? If this whole thing was flipped upside down, look a level you could look to buy off. So now this line's kind of rejecting times, right? It's rejected once, come all the way back down, it's rejected again, come back down, and now we're getting open. So so basically kind of the main thing I want to talk about here is, okay, how do you size into something like this? Like how do you get the confidence to say, okay, like these are my levels. So the first thing we do is we draw our levels. So we've drawn this one, which is pretty clear, but there's also a few more you got to put in, right? Like you got to put in, there's some tops right here. So anywhere that you see the stock, running into resistance. So I see some tops here. So I draw that line. There was the original top kind of right up in this area. You can see it hit it again. And then, then there's your ultimate risk up here. Because anytime, if you are trading intraday like this, your ultimate risk is always the pre-market or the previous day's high. Because if it gets over that, then you know that everybody who's short is trapped. Like there's no questions about it, right? So as soon as that breaks, like even by a couple pennies, then get out. Don't ask questions. If it stuffs back down, you can get back in, but that's always ultimate risk. So with that being said, okay, so what are we looking for off the open, right? Like we're here now. So, we're trading around, say, the $4.40 line. We have our $4.50 line, this dotted line here at 453. That was yesterday's close. So, what do? I have all these lines up here. This 450 line seemed to hold pretty good. So do I just, we're at 440. So do I just short full size into 450 and, risk all the way up over 510 to make, like what? Because we have to cover into support as well, right? Like we're not looking for home run trades. So like if you look at the bottom, I'll just make these lines a different color so you can see. But like if you look down at the bottom, you have kind of 417. If we zoom in here, you have kind of 417, these lows here, and then 411 or 412, these lows down here. So how do we know that it's not going to spike through three of these lines, and then all of a sudden we're full size at 450, it goes up to 490, and then we cover, and then it just tanks right back down, right? So like it's easy enough to say, okay, these are your lines and this is where you cover, but how do you size into this thing? Like how do you actually, where do you enter, where do you exit, right? So rule of thumb is always, these lines basically are acting as support and resistance. So anytime, wherever you're getting in, you always want to be entering and exiting on those levels. So like, just for example, let's say it went up to $5 and then you shorted there, you'd want to take some off at this 478 line, and then you'd want to take more off at this 450 line. We're not just holding the whole lot down to the very bottom, because then you're just, there's too many areas that it can support and save itself, right? So this is kind of where the candlestick reading comes into play. Now there's a couple different ways that you can play something like this. So what you could do is you could size in appropriately over this range. So you could say, okay, I'm going to size in, between 450 and $5, and I cut it, the highs are 510. I'm gonna stop out and say 515, right? Like at the very top, that's where I'm gonna cut it. So whatever your sizing is, maybe you do, 100 shares at 450, 200 shares at 470, 400 shares at $5. Like, so like you could increase your size as you go up, so that if it does spike that high, it's pulling your average up higher with it. Or you could do like single lots. You could do like, 200, 200, 200. on each of the lines, or you could do, you could go say 1,000 shares at 450 and then just cut it at like 465 and then look to re-enter at $5, right? Like there's a lot of different ways that different people trade it. So I'm just going to kind of talk about the way that I do it, and it depends on the setup. So for something like this, this is one that I would call like a confirmation trade only, just because it has the potential to run. There's obviously a lot of attention on it. If it gets over the 450 line, then it has reclaimed that support line, so it could potentially go higher. So this isn't something that me personally I would want to size in on the way up. I would be looking to get in on the way down once I already know where that top is, and I know where to set my risk. So that's kind of exactly what I wanted to look in here. And then if we skip over to the open, so this is the first the first hour or so of the day, first hour and a half of the day, like these lines, like you see that they still carry weight to them, right? But if you're playing wrong, you can still lose money even though you're right. And that kind of goes back to the old saying where it's like, I'd rather make money than be right. Like this is kind of one of those instances where it's like, okay, like, from everything that we just talked about over the last 15 minutes or so, like we know there's a really good chance this stock is going to fail and it's going to sell, right? But like if I just shorted this thing full size, say I saw it wash down here and I just got in full size down here at like 420, and then all of a sudden for the next half an hour this thing goes all the way up to $5, like are you going to be able to hold that whole lot through that move without covering, right? So it's like, would you rather be right or would you rather make money? So this is where the timing comes in. So as we watch this move, if we're looking here, we'll zoom in again. As we watch this move, we come out of the open, and keep in mind this is 450. So this 450 line was kind of our major support and resistance level. So what happens, right? We get sort of like a sell-off off the open. And as I'm talking through this, guys, always remember to watch the volume, because volume combined with the chart is what's going to give you the answer. One or the other alone won't tell you anything. You have to look at both in conjunction. So as we're looking at this here, we have low volume. We're just kind of doing like a little bit of a sell-off. And we've come down to this bottom line, which is the low of the pre-market. And that's where it saved it. But look, both of these lines still, they still reacted, right? Like we dipped down, we bounced off that top line, then we sold down again to the second line, and now we've come back up over that second line. So these lines are all holding weight as we walk through here. And then you can see, we come up, and then right when we get to that 450 line, the volume's increasing into that line, which usually tells you that you're going to see a little bit of a reversal, right? So as volume, and this is kind of like the contrary thing, and you get it on both sides. Like I know, David, you probably see this on your dip buys, is the volume increases as the stock sells into your line, right? And then you're going to buy for that dip on the way up. So the same happens for me in reverse. Like I see volume increasing into my line and the stock's accelerating, which scares a lot of people, but that tells me that it's about getting ready to turn around, right? So here we kind of see that a little bit, and this is good volume. Like we're talking. Sorry.
Oh no, I said that's interesting. I never thought about.
You gonna say something?
About, yeah, I never thought about it backwards like that. That makes sense though.
Mm-hmm. It works both ways, yeah. So like if we look at the volume, we're trading over 1 million shares in a minute here. So like we have a lot of volume on this stock, and that's something to be cautious of, because if there is a lot of volume, then lines cannot play out quite as well as they should, which is again why me personally I like to get in on the way down, not try and figure out where I'm going to get in on the way up. So here, like, we have this 450 line. It does reject, like, look, almost to the penny. What's the top? Yeah, to the pennies. It says the high down here at the bottom. If I hover over this, it says 450, and our line's at 450. So it touched it to the penny, and then it sold off, right? So that line was perfect, but then it immediately blows through it on this big candle with even higher volume, right? So that, yeah, sure, that was maybe a 10-cent move in a couple seconds, but like that's not the move you're looking for. Like you want this thing to turn and sell off, right? So this is where scaling comes in. Imagine if you're a full size here, and then all of a sudden it blew 20 cents past your line. Like you'd be sweating, right? So you don't want that. So we just let it play out, right? Like it comes up, plays out, sells off. Yeah.
Sorry, this one's actually pretty tricky chart to, like, if I was gonna be a short, the only time I saw the volume's telling me is a decent short is probably around 10, it looks like 10 o'clock, 10:15-ish. Because that's the only time where the price was going down significantly and the volume was rising. So that tells me that sell-off was for real. The other ones, like you have these
Over
major
here,
price moves. Yeah, the other ones you have some major price moves, but the volume's not quite there. Not quite escalated.
right? So this is kind of, and this is kind of like where experience comes in, right? So like for me personally, because I've seen these enough times, if I look at this, like if I'm watching this come into the 450 line, I'm seeing increasing volume, but these candles aren't getting any bigger, right? Like these are all the same, these are all roughly the same size candles. So I don't, and that's what we were just talking about, the correlation between the two, right? So like I need to see volume increasing, getting bigger, and I need to see those candles getting way bigger with the volume. If the candles aren't getting bigger with the volume getting bigger, then I know it's not time yet. It's not quite there yet. So that's why this wouldn't be the entry. And that really just takes like a lot of screen time, a lot of experience to be able to recognize that in the moment. So if we keep following this through, we have this come up and up, and then we fall short of this kind of 478 line that we drew, and then we get a pretty hard, a pretty decent tank down. But again, let's look at the volume. So look at this, like we have this green candle, and this big red candle, like they're all basically the exact same volume. So if you look at this red candle, like that looks significant. And we're on the 1 minute chart here, by the way, guys. So each one of these candles is 1 minute. So if you look at that, it looks like a significant move. Like you're thinking, oh, that's a big fat red candle. It's game over, right? But then you look at the volume, and right away you can tell that's not the case because there's no significant volume. Like if this volume was, 3 million shares, then I'd be all over that short, right? But not yet. It's not time yet. So you still have to wait. And this is the hard part, right? Because you're thinking, oh, I don't want to miss out. I don't want to miss out on the move, and I don't want the sell off without me. But if we go way back again, remember how much downside there is. So at this point, we're up at $4.60. This thing's up from 350. So there, if you're 20 cents late, there's still tons of room to the downside to make money. So there's no rush. So this is what you want to see, and I'm going to show you guys this in a couple different ways to show you how candlesticks can really help you out. So if we zoom into this area, this is what I want to see. So now we have the volumes kind of come down. It's sitting over this 450 line, so it's using that as support now. Volumes kind of just remaining unchanged, and then all of a sudden we get a big fat green candle here on now the highest volume of the day. And then we have this next one, which is, at least double the volume. And that's when we get that big move into the top line, the very top line, which is, up here at $4.95, $5. So at this point, we're only, 15 cents away from where your ultimate stop loss would be. And we're seeing this accelerated move on high volume. So that's what you want. That's where you can start in short. Right. So as long as you're patient to wait for these kind of moves, it makes it a lot less stressful because now, look what happens. You can wait 2 minutes after this candle, you can get in over here at, $4.85 and just risk the high of this candle because that's the biggest volume candle. That's the one that rejected off the line. So you can go in here at, say you got in at 490, this candle's $5, you can get in at 490, 3 minutes later, with 1,000 shares, risk $100, and your downside is, potentially like $1.50, right? So that's why kind of confirmation is really nice. And then as this thing kind of peters out, David, you talked about this candle over here. So yeah, that's another good indicator that this thing's going further is that we have this kind of consolidation for a while on steady volume, and then you get these kind of big death candles. You get this wick that goes higher than the previous ones, which just traps people and stops people out, and then it just stuffs right back down. Those usually signify death. And on the flip side, if this doesn't signify death, because 99% of the time it does, if you see one of these candles and it comes down and then it immediately reclaims and starts to go higher, then you buy that fucking thing because that's going to squeeze the hell out of everybody. And it's probably going to rip up like $10.
Yeah,
So,
that thing sold into demand, like unexpected demand, and it's going right up.
Yeah, but that's the key to being a good trader is like always looking at both sides of the trade, right? Because like if you're just thinking short and you just think of everything we just talked about of why this thing is going to sell off, and then you see a candle like this, and then it reclaims and it's going up and it starts creeping up, you're thinking, oh, well, the highs are up here. I'll just add more. And I'll just add more. And then all of a sudden you keep adding and it just kills you. Whereas if you're thinking both sides of the trade, immediately you'd see that and say, oh, fuck, if I was a long, I'd be buying the hell out of this thing. So like, just get out, right? Like, just bail. But one of the other things I wanted to show you guys is how you can use this on different time frames. So everybody trades on different time frames depending on what you're doing. Oh, what did I just do there?
Oh, you know what? Before you do that, I just want to say something on the psychological side of it, because like for us, especially for you, you see that giant spike was into $5, you're just salivating. That's exactly what you're waiting for, right? But
Yeah.
if you remember, if you try to go back to like when you were starting out, like if you're inexperienced, that candle gives you anxiety because you're like thinking, shit, am I wrong? Is this thing gonna keep going up? It's like you don't want to like get into that short anymore,
Oh yeah, for sure. Yeah, it's terrifying.
Yeah, it's experience
Yeah.
that told you like, no, this is what you want.
Yeah, exactly. But that takes a long time, right? Yeah. So the other thing that I wanted to show is just like really quickly how this looks on different time frames, and you guys can use whatever makes you the most comfortable, to trade these things. So like if we look on like I'll show you a couple other ones, but the 5 minute is one that I really like too. So if I look at if we look at the 2 minute chart here, it's a similar kind of thing, right? Like you still have these increasing volume lines, and then this one here is still, that's still the major move in that top line. If we look at a 3 minute candle here, see what that one looks like. Yeah, 3 minute candle, like again, right? We're still getting that big volume move into that line. But my favorite is the 5 minute, and I'll show you why here. So if we look at the 5 minute candle, this is my favorite type of candle. And I've just started kind of looking into this a lot more recently, because to me, like this really illustrates the stuff move, right? David, I see you nodding your head. You can see that right away, right?
Of all the time frames you showed, this one's the one that showed the right information in terms of volume.
Yeah, like this is super clear to me, and obviously David, you noticed that right away as well. So this is my favorite. Now the thing with this one is, based on my own research, is that you're not going to get the best entries necessarily because it is a 5 minute candle over something that's moving relatively quickly. But every time, well, I shouldn't say every time, but probably over 90% of the time that you see this, that you're going to get that sell off. So again, if we look at the volume down here, we still have the big volume on that move. So this is what we call, like a rejection candle or a stuff candle. And basically what we're looking for is this big top wick, because that big top wick is all emotion. It's all panic. It's all people getting trapped on both sides of the move. And it's all on the biggest volume of the day. So that to me tells me that this is the top, right? So that is clear as day. That's the top of the move, right? So it makes it a lot easier because I can sit there, I can watch the 1 minute chart and you can watch the 5 minute chart, and I can just sit here and relax and drink my coffee or whatever and just watch this thing go. And you see this move here and it's like, okay, well, you see this move here, and this candle here is kind of tricky because this is a stuff candle. Get over here a little bit. This is a stuff candle as well, this one right here, because it's got that big top wick, tiny body, and then it's got a little bit of a bottom wick. But the reason that one essentially doesn't matter is because look at the volume. The volume is less than the previous candle, which was just a normal big green candle. So that invalidates itself because you need both of those factors. You need the candle and you need the volume to say the same thing in order to confirm the trade. So we just wait again, right? And then as we can see, it goes higher and it goes higher. So now we have the stuff move here. So this is where you can get in like right here, full size, and just cover into washes, re-short on bounces, cover on washes, re-short on bounces, as far down as you want to go, basically until the thing kind of turns around. But like the nice thing about these in my research is that 90% of the time when I see this type of thing on a 5 minute chart, the top of this candle is the top. So if that breaks, like you can give it like a penny or two wiggle room, but if that breaks, then that trade thesis is invalidated, where it doesn't work if we look at the 1 minute candle or something like that, like if I saw a move like this and then the 5 minute candle, the 5 minute chart didn't show that same stuff candle in the same move, this wouldn't necessarily be the top. So the 5 minute to me confirms the top of that move, which is why, at the point I'm getting in, I'm getting in, down here in the high 470s. Well, we're already way off the highs, and it's been basically 5 minutes since that move. But because of that candle, based on my data, I know that is essentially that's like, that's the kiss of death. Like, it's game over. And then, you can just get in here, cover on washes. This thing goes sideways for a while. This is a 10-cent move back and forth. So you can just go, bang, 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 bang. Just, take 10 cents, 10 cents, 10 cents, 10 cents, and, get another 30 cents a share out of this move. And then just keep a little bit on and, kind of cover down a bit further and, let it go. And then it just, it just breaks down after that completely. Right. So, but that's the main move. So back to the original thing that we were talking about is if you're combining your thesis on the trade with the chart candles, with your resistance levels, that's how you can determine how you want to trade. So remember I mentioned, you can trade multiple different ways. You can skip because you might not get that rejection candle. Like this thing could have just as easily gone up to 470 and then just sold off from there. And then, back down to 420 and, you missed out on a 50-cent move because you were waiting for that big high volume stuff candle that never happened, right? Like that can happen. So that's why there's different ways of trading. Like there's scaling in along the upside and then adding in bigger on the downside. So, you're not missing out on potential front side moves. And then there's, just waiting for the backside completely and just getting in on the backside, but you might not trade as often, but it's also less stress and generally higher reward. So, it's really just up to the person. It's up to the personality. For me, I don't like stress, so I'm always more of a confirmation backside kind of guy. And, that's just the way that I've had the most success. So,
Are you on the 5 minutes?
yeah, what do you think about it? I think that's probably, no, this is the 1 minute. I'll go back to the 5 here.
I just want to show something that I saw that was like my confirmation. It actually wasn't the stuff candle. It's the candle previous to the stuff one. That's the
This
one
one
that
here?
tells me to pay attention. Yeah, that's the one that tells me to pay attention because you've got 3 consecutive candles of lower volume. So this guy, despite that its price going up, there's less and less people bidding up the price. That tells me this momentum is weak. Like this thing is running out of steam.
Okay.
And then you wait for the next candle. When you see that big stuff, you're like, A, it's out of steam. The next candle shows if it's being stuffed. They're like, okay, that's it. It's over. The run is over.
Yeah. Yeah, that's a good point too, for sure. Yeah, so for you, for example, this could be a situation where, just for argument's sake, you could see something like that and say, okay, this thing's running out of steam. So, maybe I'll put a starter trade on at 470. I'll add a little bit more up here at 495 because you know from your experience that this means it's slowing down. So you start sizing in maybe 5% of your size, 5% of your size, just in case you just get a little bit of money out of it. And then once you see this move, then you throw on the other 70, 80, 90% of your size and then ride that down, right? So there's no right way to trade these things, guys. It's really just a matter of finding out what setups you like, knowing what confirmation is, knowing where the support and resistance are, and then determining based on your own personality and based on your own trading style, how you like to get into these trades, right? Like it's like one of the biggest things with trading is a confidence. So for me, I would prefer to trade less and win more money and more often than trade more frequently and have more small losses. Because if my confidence is high, I can trade big size. If my confidence is low, then I don't have the confidence to get into something big. So I might see something like this and I might only put on half the size I usually do because maybe my trading method is scaling in on the way up and maybe I only win 60 or 70% of the time, so I'm always a little bit conservative. Whereas like maybe on something like this I win 95% of the time, the reward is way bigger, so I can just wait, ignore the other ones, and then I can hit this one with way more size. Maybe I'm trading half as often as I would have been, but I'm making the same amount of money or even more, and I'm trading less, which means less stress, and I'm trading confirmation, which also means less stress. So it's a balance, right? You just got to figure out what works for you.
Yeah, I think the main thing is like, if to sum it up, it's like the way you judge the sides. It's like it's a compromise, right? the more safer, more confirmation you play, the less your profit gets to. The more risk you take, the higher your profit. It's basically that kind of scale, right? And within
Yeah.
that, you find
Yeah.
whatever makes you feel comfortable.
Exactly, because like something like this, for example, like you'd be getting less, less cents per share. So like I might only make, maybe 20, 30 cents per share, but maybe I could put 5,000 shares on this if I did a confirmation trade. Whereas if I was scaling it on the way up, maybe I'd make 50, 60 cents a share, but maybe I'm only comfortable enough to get, 1 or 2,000 on. So I might be making, like if you look at the trade, it might look like, the move's this big and I took a piece like that out of it, but maybe that piece I took was 10,000 shares, whereas the move could have been this big and you see me scaling in and then covering all the way down to the bottom. Maybe that was less money, right? Because I
Yeah,
was using way less size because I was a bit more nervous, right? So
yeah,
it's
yeah.
there's a difference between like the Instagram picture perfect looking trades and the trades that are actually making you money.
Yeah, I'm with you on that. Like consistent trades over time versus like a one big cash grab. That makes me feel more
Mm,
comfortable.
yeah, for sure. So I think on that note we'll end it.
Yep.
Thanks for tuning in, guys. Hopefully you learned something, and tune in next week for more stuff.
Take care.